Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So what I want to do today is again look at one of the companies that have reported earnings recently. And we said, you know, the earnings season is coming to an end. We talked about that yesterday, and the fact that I'm going to look at majority of the companies that I own in this portfolio and see how they're looking right now. You know, is the company still as good as we thought initially? Because I do know there's a lot of you that own the same stocks that I own. Okay. As always, please do your own research and so on. But of course, you've done your research, you own the companies, and you're probably thinking, okay, what do I do with this company? Maybe they've gone up so much in the last few weeks and months. So I'm going to go over some of the, basically as many of these companies as I possibly can in the next few weeks. And I'll tell you exactly at the end of the video what I will be doing with this particular stock, inshallah. If you haven't seen yesterday's video, go and watch that one. We talked about one single company and what I would be doing, inshallah, moving forward. And that's exactly what we're going to do today. So before we get to that, as always, please help the channel by, of course, joining the Patreon account, where you get access to a lot of these things, all the buys and sells, the family portfolio, you know, frequent update from that updates and so on. And you also get the dividend calendars, the watch lists, the ETF trackers, the private Discord, where a lot of brothers are sharing good practices, and it will only cost you 15p per day, and I'm sure you get a lot out of that, inshallah. Right, the company we're going to talk about today is AstraZeneca. AstraZeneca, I'm sure you know, is a pharmaceutical company based in the United Kingdom, and I do own the UK version of this stock, so they're slightly different, of course, in terms of just the ticker side of it, but in terms of the financials and everything else, more or less the same. One trade is in pounds, one trade is in the US or US dollars, if you like. So a year to date, the stock's up 22%. So it wasn't not long ago that I've been talking about the company and how undervalued it was. I actually bought it when it was undervalued, and I will share with you guys at the end of the video how much I'm up. So you might be thinking, what the hell does this company do? So let's talk about it first. Like I said, it's a pharmaceutical company. They said we are this. You can find this, by the way, in their on their website. So there's a lot of information here you can get your hands on about the company, what they do, and so on. All that information is on the AstraZeneca.com/investor relations, and then you click annual reports. You get all the details basically that you need. Okay, so they said we are a global science-led, patient-focused pharmaceutical business. Okay, and then they talk about the dedication and so on. They said their strategy is this. Okay, the science and innovation, growth and therapy area leadership, and people and sustainability. Now, these are some of the things that basically that are in their pipeline, if you like. Okay. So they got 178 projects in our developmental pipeline. That's exactly what they said. So 178. What that means is when, you know, these companies, they're of course very innovative companies, pharmaceutical companies. So what they do is they might have the pipeline of, I don't know, 170 something now. Some of them might be stage 1, stage 2, stage 3 is when they start releasing and so on. That's where you hear about it. Stage 2, maybe you might hear about it. Stage 1 is still under development, they're still testing. Okay, for the NMEs, of course, they also have 17 in that pipeline. NMCs and major life cycle management projects, also different phases of 127 different ones. So they do have a lot of things in their pipeline, and they have current, of course, and drugs that they sell. Now, when it comes to the areas that the company reports, these are the main areas that the company reports. Okay, so the oncology side of it, the biopharmaceutical side of it, and rare diseases and others. Now, one thing I really love about this is how diversified this is. So 40%, 40%, 17%, and then 3%. So we're not just focusing on one section or one segment of that business. As you can see, the 240s, 17%, you know, and then you've got the 3% there. So overall, really good, as well as, of course, in terms of the regional diversification, you're looking about 42% from the US, which I was quite surprised. I actually didn't think it was that big. Emerging markets are 26%, Europe is 21%. Okay, established rest of the world is about 11%. So very diversified, you know, portfolio, and of course in terms of the regional side of things, very, very diversified. Of course, one of the major things about these companies are when it comes to any of these drugs. If anything goes wrong, the stock can tank massively. They can get sued and all sorts of things. We've seen that with J&J and so on. So you have to be mindful of the risks as well. All of this looks nice, but you have to be mindful of that side of as well. Right, let's now look at the financials, because that's why we came here for, just to see if this company is a buy, sell, or hold right now. As you can see, we're looking at the US version of the stock. So $82 right now, to over $2 in terms of EPS, and market basically cap is right now $256 billion. Now this is, I need to double check, but not long ago this was the biggest company in the United Kingdom. So the FTSE 100, so the biggest company was, I think they were maybe the second or third or the first, I can't remember, but I'll check that in a second, okay, by market cap. Now beta is quite low. Current P is about 40 apparently. This is seems quite high, but forward P is about 20. The 5-year average was about 20. So based on that, it seems very, very expensive. Price to free cash flow is about 30 right now. So the sector, the healthcare sector right now is trading about 17, and when it comes, the S&P 500 is about 24 right now. The dividend yield, okay, so we're looking at remember the US version, and I'm using I'm not using Dividend Max. I'm actually using Simply Safe Dividend, so that this information normally isn't that correct. So I'll share that with you guys at the end of the video as well, so if you want to see it. So 2.3 dividend yield, which is quite nice. You get $1.95. Latest increase, so 40%, 41% when it comes to the payout ratio side of it. So I wouldn't worry too much about this. I'll share that with you guys. In fact, I will just do that now. As you can see, more or less increasing over the last 10 years or so. So since 2006 has been going up. 2011 it went down, then it starts going up a little bit. It went up 2016, then came down. So they are not really consistently like every single year growing, but it is heading the right direction nevertheless, which is quite nice to see, of course. Now when it comes to the safety, according to Simply Safe Dividend, it's about 70%, which is nice. They have closer to $7 billion of free cash flow right now. Free cash flow compound annual growth rate for the last 5 years about 55%, which is absolutely huge. Free cash flow yield of 3.8%, which is higher than what we're looking for, and free cash flow margin is about 14%, which is higher than what we're normally looking for. Profit margin, operating margins, return on equity, and return on invested capital, all looking really good. Net income, the compound annual growth rate for the net income is 24%, which is absolutely huge. There's not that many companies that start with that sort of a net income in terms of compound annual growth rate. The compound annual growth rate for the last 5 years, that is, by the way. Total return in the last 10 years, we're looking at about 11%. Revenue for the last 5 years, about 16%, compounding at about 16%, which is nice. Say 65%. There's definitely been some sort of they've probably acquired another company, so this is not 65% is quite high. Current ratio, and we talked about this in the last video as well, it's important because it tells us if this company has a current ratio above 1, then that means the company has absolutely no issues. Okay, they've got more current assets than current liabilities that they can use for the next 12 months. This one is slightly lower, so I wouldn't worry too much about it because they do have excellent free cash flow here, so I wouldn't worry too much about it. They're expecting the earnings to grow about 13 to 14% in the next 5 years, which is quite nice. Current price, we've seen it already. According to Morningstar, they're actually saying it is a fair value right now. $78 per share is basically where they think the price should be. That's about $4 or so, and lower than where we are right now. And according to Simply Safe Dividend, okay, the US version of this, Simply Wall Street, sorry, the US version of this stock, they're saying currently 149 is their target, 45%. So that's absolutely huge. Let me show you the UK version of it. So if we go here, you can see this is the UK version of the stock. So 50% undervalued at the moment, £256 right now over that, which is quite nice to see. And the expectation for the EPS growth is about 16-17%, which is basically similar to 14-13%, which is similar to where we are now. Now tip rank is saying about $87 per share. That's about 7 or so higher than where we are. It's a strong buy from them, and it's a buy from Seeking Alpha, and they're saying it's about 89% and $89 per share. It's about 10% or 11% upside from where we are. So all of these are indicating the fact that the stock is actually either undervalued right now, it's a buy definitely, or fairly valued, and potentially if you give yourself a little bit margin of safety and you get it for below 75, I think then you would be fine. Now in terms of rate of compliance side of things, as you can see, there's no issues. So 99% when it comes to business activity screen, interest bearing debt about 14%, interest bearing security less than 3%, and they have been buying back their own shares or kind of maintaining it, and then 2011 they actually start diluting the shares. Potentially that could be they might needed more money to do research or acquire other businesses and so on. So for the last 3 years they have not actually bought any shares back. Now, if we compare this company with, of course, the S&P 500, okay, as well as, of course, the companies in the same sort of a sector. So I think this is Roche, whatever it's called, and then this is Merck. Similar sort of a companies, 55% in the last 3 years. The S&P 500 just basically above 20%. This one is actually only been negative 10%, and Merck is about 63%, so it's slightly higher. Last 5 years, Merck's about 63%, this one is 104%, and the last 10 years, okay, 228%, Merck's about 170, and this one is about 53 and 173%. So they are actually beating the S&P 500. They are beating their competitors in the last 10 years. And this is why I've always said to you guys, don't just buy stocks just to kind of sell them. You would have up years, years where things are down, years where things are start basically up. But overall, look at where the company is right now, over 228% over the last basically 10 years, which is quite nice to see. Now, let me just quickly show you my shares. So I own 40 shares of this wonderful business. I'm up right now about 17%, 742%. If you recall, maybe this time last year, we were talking about buying more of this company because it was so undervalued and it was so down at the time. I'm not saying I'm genius, but I just did the research, of course, and I felt like it was definitely undervalued at the time, and I bought more, and right now is one of my favorite holdings and is there 17%. So inshallah we'll see what happens. What am I going to do right now? I wouldn't buy it. Okay, my average, just to show you, is basically about $109. Let's call it 111 pounds. Okay, but I will not be touching right now because I do have other companies in my portfolio that's slightly down. Normally what I tend to do is I focus on other holdings that I have that are undervalued at that point, that I want to hold on to for a very long time. But this one right now, although it's not too expensive, it's basically I'm up about 17%. So I'm happy with what I have right now. And in fact, if you see, is my what is this, fifth, sixth basically holding, top holdings basically when it comes to the top 10, you can see is that 6th place, which is absolutely fine. So about closer to 5% so far. So I'm going to hold on to it. I'm going to leave it alone, and inshallah I will let you know if I ever decide to do anything different. I'm going to continue doing this inshallah for the next few weeks. So if you're interested in any of these basically things, or interested in any specific company that I own in here, let me know in the comment section and I'll put a video together inshallah. Do not forget to join us inshallah. It will cost you 15p and you get access to the Discord plus all of these other things. And guess what? It genuinely helps the channel. So I would genuinely appreciate if you could do that. If you can, of course, like the video, subscribe to the channel, comment on the comment section inshallah. Have a wonderful day. Assalamu Alaikum.